Hi everyone, my name is Jamie Keach from Resource Insider, and today I want to talk to you about why commodities are so cheap and why they represent such a unique investment opportunity. Today we're going to look at the economic paradigm shift that's currently happening all around us, and we're going to talk about how you, as investors, can both protect your capital in this new environment and also make money. The first thing you need to remember about commodities is that they are cyclical. Prices go up, prices go down, depending on supply and demand and what is going on in the world. Today we are at the bottom of one of these cycles, and it's all across the board. It is energy, it is metals, it is agriculture. They are trading at 50-year lows. Today you can buy commodities at prices we have not seen since the 1970s. This is important to understand because the cycle is starting to turn around and prices are starting to rise. But to understand this, we first need to discuss why this happened in the first place, why prices have been so low, and it all comes down to globalization. In the late 1980s, when the Berlin Wall came down, this set the conditions for international trade to flourish. And we saw this in things like the signing of NAFTA, like the creation of the European Union, or China opening its doors. But it also set the conditions for businesses to go international, to go global for the very first time. And understandably, many businesses moved to the place where they could operate most cheaply or where labor was least expensive. And because of this, the cost of goods went down and down and down, creating what economists would term a deflationary environment. This means that the relative cost of buying something today is less than it was yesterday. In a deflationary environment, not only do the cost of consumer goods go down, but so does the underlying material used to make them. Things like steel, things like copper and oil, the commodities that we rely upon. Now, you might be watching this and thinking, hold on, Jamie, isn't this the exact opposite of what I've been hearing about in the news lately? Aren't we in an inflationary environment? Hasn't the government been printing money? Haven't you heard of quantitative easing? Doesn't this cause global inflation? And the answer to that is kind of. Because governments have been so aggressively inflating currencies, we're seeing the price of things that cannot be outsourced go up. Things like education, things like childcare, things like housing. These are things you cannot ship overseas and create in a cheaper environment. But despite seeing certain things increase in cost locally, globally we are still experiencing deflation. And this is a very important distinction. If you look at the deflationary cycle over the last 10 years, you can see an up and down, up and down, up and down. This represents what we would call a bottoming period. And what that means is we are reaching the end of the deflationary cycle. And what happens after this is we move into an inflationary environment. Essentially, the pendulum swings back the other way, and we're going to see the cycle uptick. In an inflationary environment, the relative value of money goes down. Your buying power decreases, whilst the value of hard assets goes up. In this environment, you want to own commodities. You want to own physical things. Now, you should be asking yourself, why now? Why are we shifting from a deflationary environment to an inflationary environment? And if you're familiar with this space, you've probably heard commentators and pundits saying that this is going to occur for years now. But what a lot of people missed is the fact that for this to happen, we need a catalyst. Something big has to shift in the world to bump us out of that holding pattern and move into the inflationary environment. And we all know what's going on right now, and that's COVID-19. Coronavirus has created global mistrust. Countries are on lockdown. Flights have been canceled, and governments no longer wish to rely on foreign powers for essential goods. Things like face masks, things like food, things like essential commodities, like energy and oil and gas, like uranium, like gold, like copper. These things are going to be produced in country and are going to be prioritized by governments. Trump came to power on a protectionist platform, Make America Great Again, and this is about to get amplified in the United States and around the globe. We're going to start to see countries nationalize their resources. We're going to start to see manufacturing coming home and we're going to see huge infrastructure programs to get the economy going. And a result of this will be commodity prices rising drastically. In this coming inflationary environment, investors with exposure to commodities, and more importantly, the companies that produce them, like mining companies, are not only going to be able to protect their assets, they're going to be able to make a lot of money. However, the devil is in the details because not everybody is going to make wise investments in this new environment. And if you want to learn how to take advantage of this coming paradigm shift, sign up to my free newsletter at resource-insider.com, and you're going to get to see firsthand where I'm investing my own money and how I plan on taking advantage of this. Thank you very much for watching. If you haven't signed up, please do, and remember to follow us on YouTube. Thanks again.